Goods and Services Tax, or GST, is a comprehensive indirect tax levied on the supply of goods and services in India. To make sure that businesses are actually following the law, tax authorities are given the power to conduct audits. These audits are, a routine part of tax administration. Their main purpose is to verify the accuracy of the returns filed, the taxes paid, and the overall financial records maintained by a registered person. This process helps in detecting any short payment of tax or incorrect claims of input tax credit. It really is a fundamental mechanism for maintaining the integrity of the tax system and ensuring that all businesses contribute their fair share to the national revenue. However, the structure of GST in India involves both central and state tax authorities. The central GST, or CGST, is administered by the central government, while the state GST, or SGST, is managed by individual state governments. This dual administrative framework can sometimes lead to, jurisdictional complications for businesses. A significant problem arises when different tax authorities decide to investigate the same taxpayer for the same tax period. For instance, a business might find itself being audited by the state GST department and, at the same time, receiving summons from a central agency like the Directorate General of GST Intelligence, or DGGI, creating a situation of parallel proceedings that can be quite burdensome. This scenario of multiple investigations places a considerable strain on businesses. Responding to one audit is already a time-consuming and resource-intensive process. It requires the company to dedicate staff, compile extensive documentation, and engage with tax consultants. When a second authority initiates a separate investigation covering the same ground, the burden just multiplies. This can disrupt normal business operations, increase compliance costs significantly, and create a great deal of uncertainty for the taxpayer. The fear of facing endless inquiries from different agencies for the same set of transactions really undermines the goal of a simplified and business-friendly tax environment. The key question that emerges from this situation is whether such parallel investigations are legally permissible and fair. While tax laws are designed to prevent tax evasion, they must also provide a clear and predictable framework for taxpayers. Businesses need to know that once an audit for a specific period is concluded by one competent authority, they will not be subjected to another round of scrutiny for the exact same period by a different agency, unless there are extraordinary circumstances. This principle is crucial for fostering trust between taxpayers and the tax administration, ensuring that the audit process is used for its intended purpose and not as a tool for harassment. The case of Truvolt Engineering Company Private Limited and another versus Additional Assistant Director, DGGI and others, recently heard by the Calcutta High Court, brought this very issue into sharp focus. Truvolt Engineering, the petitioner in this case, had already been through a comprehensive audit process conducted by the state GST authorities. This audit covered the financial years from 2019-20 to 2021-22. The state authorities meticulously examined the company's books of accounts and records for this period. The process was carried out under the provisions of Section 65 of the West Bengal Goods and Services Tax Act, which provides the legal basis for such audits. Following the completion of their detailed audit, the state GST officials concluded their proceedings. Based on their findings, they issued a show cause notice to Truvolt Engineering on November 29, 2024. A show cause notice is a formal document that outlines the discrepancies found during the audit and asks the taxpayer to explain why a certain action, such as the demand for additional tax or penalties, should not be taken against them. From the perspective of the tax administration, this marked the culmination of the audit process for the specified years. The matter had officially entered the adjudication stage, where the company would respond to the allegations. The situation became complicated when a different government agency, the Directorate General of GST Intelligence, or DGGI, entered the picture. The DGGI is a specialized investigation wing under the Central Board of Indirect Taxes and Customs, tasked with uncovering significant cases of tax evasion. In November 2024 and again in May 2025, the DGI issued its own summons and notices to Truvolt Engineering. Critically, the DGGI's investigation was aimed at the very same period, 2019-20 to 2021-22, that had already been audited by the state GST authorities. This action effectively initiated a second, parallel investigation into the company's affairs. Faced with the prospect of undergoing another full-fledged investigation for the same period by a different authority, Truvolt Engineering sought legal recourse. The company filed a writ petition before the Calcutta High Court. Their primary argument was that subjecting them to a duplicative inquiry was unjust, arbitrary, and amounted to harassment. They contended that once one competent authority under the GST framework had conducted an audit and initiated proceedings, another authority should not be permitted to launch a fresh investigation into the same matter. The case set the stage for the court to provide much-needed clarity on the jurisdiction of different tax agencies. The Calcutta High Court, in its landmark ruling, provided significant relief to the taxpayer. The court carefully considered the facts and found that the state GST authorities had already conducted a thorough audit under Section 65 of the GST Act. This audit had resulted in a formal show cause notice, meaning the matter was already being adjudicated. The court observed that allowing the DGGI to start a fresh, overlapping investigation would be improper. It held that the DGGI should not be permitted to conduct what it termed a roving inquiry into a tax period that was already scrutinized and acted upon by another competent GST authority, in this case, the state GST department. A central pillar of the court's decision was the principle that parallel proceedings by different authorities for the same cause of action should be avoided. The court reasoned that while the GST law does not contain an explicit provision that completely bars parallel investigations, the spirit of the law aims for efficiency and fairness. Initiating a second proceeding for the same period by a different wing of the tax administration would lead to chaos and subject the taxpayer to undue hardship. The court effectively established a procedural safeguard, preventing agencies from stepping on each other's toes and ensuring a more orderly and predictable tax administration for businesses. However, the court also recognized that this restriction is not absolute. An important exception was carved out for specific circumstances involving serious misconduct. The court clarified that the bar on a parallel investigation by the DGGI would not apply if there was a prima facie establishment of fraud committed by the taxpayer. This means that if the DGGI possesses credible and specific information suggesting that the taxpayer engaged in fraudulent activities to evade tax, it could still initiate an investigation even if an audit had already been conducted. This exception ensures that serious cases of tax evasion do not go unpunished due to procedural limitations. In its final directive, the court ordered the DGGI to refrain from proceeding with its investigation for the periods already covered by the state GST audit. The DGGI's inquiry was limited to any financial periods that were not part of the initial audit. This order strikes a crucial balance. On one hand, it protects taxpayers from the harassment of multiple duplicative investigations over the same issue. On the other hand, it preserves the power of investigation agencies like the DGGI to act decisively when there is concrete evidence of fraud, thereby safeguarding revenue interests. The ruling prevents procedural overreach while keeping the door open for legitimate and targeted investigations. The Calcutta High Court's decision in the Truvolt Engineering case is a significant development in India's GST jurisprudence. Its most immediate and beneficial impact is the enhanced protection it offers to businesses. Taxpayers can now operate with greater certainty, knowing that they will not be subjected to endless cycles of investigations from different state and central agencies for the same tax period. This saves them an immense amount of time, money, and mental anguish. The resources that would otherwise be spent on managing multiple inquiries can now be redirected towards core business activities, such as growth, innovation, and job creation, which is beneficial for the economy as a whole. This ruling also brings much-needed jurisdictional clarity to the tax administration itself. By establishing a clear principle against parallel proceedings, The court has provided a guideline for how different tax authorities should coordinate their actions. It encourages better communication and information sharing between central and state agencies. For instance, if the DGGI has specific intelligence, it may be more appropriate for it to share that information with the authority already conducting the audit, rather than launching a separate, conflicting investigation. This fosters a more cohesive and efficient tax administration system, reducing interagency friction and ensuring that government resources are utilized more effectively. The concept of no roving inquiry is a cornerstone of this judgment and reinforces a fundamental principle of administrative law, that government power must be exercised fairly and not arbitrarily. It protects citizens and businesses from fishing expeditions by tax authorities, where an agency might start a broad investigation without specific information, hoping to stumble upon a discrepancy. The court has made it clear that investigations should be based on credible information and must respect the proceedings already undertaken by other competent bodies. This strengthens the rule of law and builds taxpayer confidence in the fairness of the GST system. In conclusion, the Calcutta High Court's order serves as a vital check on the powers of tax authorities, ensuring they are exercised in a reasonable and non-oppressive manner. It clarifies the rules of engagement for central and state GST bodies, preventing jurisdictional overlaps that harm businesses. By prohibiting parallel investigations for the same period in the absence of specific evidence of fraud, the court has provided a clear, fair, and pragmatic framework. This landmark ruling is a major step forward in creating a stable and predictable tax environment in India, which is essential for promoting ease of doing business and encouraging voluntary compliance from taxpayers across the country.